Welcome to the UK Finance webinar channel. My name is Tony O'Sullivan. I'm the Head of Intelligence here at UK Finance. In today's session, we'll discuss real-time defense against APP fraud, protecting against account-to-account payments. I'm delighted to welcome a panel of experts for this discussion today. I'll pass over to them to introduce themselves. First off, I'll pass over to Stephen Adams.
Good afternoon. Thanks, Tony. My name's Stephen Adams. I work at Equifax as the senior fraud consultant. Been with the firm about 18 months, but have a client-side background, so 20 years across companies like Admiral Insurance, Confused.com, and RVU, responsible across those many times for counter-fraud, risk, elements of compliance, and delighted to be on today to talk about this topic.
Lovely stuff. Thank you, Stephen. Over to you, Chris.
Oh, hello, I'm Chris Farrow. I am a senior fraud manager at Monzo. Been there for about 7 months, which feels like it's flown by. Prior to that, was at UK Finance, leading on all things APP. So, looking forward to the conversation.
Thank you. Lovely. Over to you, Kat.
Hi guys, thank you for having me on today. I'm Kat Livesey. I work as a strategic fraud manager at NatWest. I predominantly work with our wealth customer base as well, so predominantly Coots. I work within a product owner team, so essentially my wider team are responsible for making sure that our fraud and scam losses are as low as possible, whilst also delivering brilliant client services and journeys.
Nice one. Thank you, Kat. And lastly, over to Ewan.
Yeah, good afternoon, everyone. My name's Ewan Ballantyne. I'm Head of Products at Pay.uk. Also, we're traditionally a payments centred organisation, but we also support a range of fraud prevention and detection and reimbursement services where can the industry asks us to.
Lovely. Thank you very much, all. Just before I hand over to the speakers to go through the panel session, I'm just going to cover off a few housekeeping items. So today's webinar will last around about an hour, and we'll combine a panel discussion as well as answering audience questions that come through. This session will be available to watch on demand, and you can access the recording by visiting the UK Finance Zoom webinar hub or via the same registration link that you've used to join today. Please do post any questions that you have for our panel via the Q&A tab. When you ask a question, your name is not disclosed to the webinar attendees. We will try to answer these questions during the webinar, but if a fuller answer is needed or we run out of time, I'm going to encourage you to reach out to the speakers or UK Finance directly, but hopefully there should be enough time either in between or at the end to go through these. There is also going to be a link to a feedback survey in the resources section, and we'll greatly value any thoughts that you have on the webinar today. So as the webinar progresses, we'll have a couple of poll questions, which will probably show up pretty soon. I'm going to pass over now to the panelists. So just really basic, just to start off, from your perspective, what are the industry trends and landscape since APP regulation came into force in 2024? I'll pass over to Stephen to start off the discussion on that one, please.
Thanks, Tony. We've been working with the financial services for a number of years on counter fraud and a number of elements. So it's been very natural for us to look at APP specifically, especially when we know that fraudsters are diversifying in multiple directions. So some of the controls we will be using to stop fraud in other industries at other touch points will be the same people that are committing APP fraud. And from a kind of trends perspective, certainly we see the constant increase, I think, in all fraud typologies, both in terms of value and in terms of volume of transactions. And it's working out how we can support trying to reduce those, but also having 20 years client-side experience where I've always been very keen to try and actually stop and identify the fraudster. Maybe actually linking up APP with all those other fraud typologies gives us that other opportunity as well. Try and kind of stop multiple frauds with one set of systems, really. So it's a really interesting area at the moment for us, and really keen to see how we can help.
Yeah, definitely one of the key fraud types over the last couple of years, especially with the regulations coming in. I'll pass over to Chris from Monzo. Anything you want to add on to what Stephen's just said?
Yeah, probably just to add to that, in fairness, I think, as Stephen said, over the last couple of years, we've just seen fraud escalate. So I think one of the things we can say, and you just mentioned APPR, so I can't help but touch on it because, as you know, slight passion of mine. So I think on APPR, I think one of the things that we'd seen before that came in is that we were seeing fraud migrating. We were seeing fraudsters starting to target other different channels. So we were seeing international payments, we were seeing card scams going up, something that we'd never really seen before. And we started to really see escalate in the couple of years before APPR came in. And I think post the 7th of October 2024, and that feels like it was yesterday, can I just say, as opposed to a year and a half, we've just seen that carry on, really. I think one of the things I do want to call out, though, is although we're seeing that carry on, obviously we know that PSPs invest millions, billions in actually trying to counter these frauds. I've got to call it out on the call because one of us is going to touch on it. But I do think that obviously we've continued to invest, and unless other people come to the table and play their part, the fraud's going to continue to go up. So I'm actually a supporter of APPR. I think there's some quite significant gaps in APPR that still need to be fixed. One of those is complex cases, and I think that's one of the things we do need to call out early on in today's webinar. Complex cases are something that's quite a significant challenge. We'd started, and I probably should say what complex cases are because I'm used to talking about them all the time. But complex cases tend to be unregulated investments generally. They are cases that sort of span quite a significant period of time, and I think that's one of the things that we need to call out. We are seeing criminals being quite happy to kind of play the waiting game now. They don't want to do small, quick turnaround frauds anymore. They're quite happy to spend a few years sort of doing Ponzi schemes, investing quite a lot of time, effort, making themselves looking legitimate, and then cashing out. So one of the things we've seen post the 7th of October is that there's an awful lot of these complex cases that are now coming to the surface. The regulations don't really cover them because obviously in the regulations we have to reimburse within 35 days, or make a decision, within 35 days. It takes a really long time to make a decision. So I think it's important to touch on them and say we've seen more of those come to the surface. I expect to see more of them over the coming months, if I'm absolutely honest. And it feels like as an industry, we're not in a great place with them at the moment. So that's the main things I wanted to touch on. But as Stephen said, just more of the same, lots of investment, fraud still going up. And I think that's just because the level of attack is going up as opposed to us not necessarily doing enough.
Lovely stuff, Chris. No, yeah, definitely well worth touching on complex cases. I know a significant amount of pain for a lot of PSPs out there at the moment. Kat, over to you. I don't know if you've got any sort of insights on that.
Thank you. I think what we've definitely seen as well is whilst companies within the UK have really tightened up a lot of their regulation because of both the sending and beneficiary angle to the regulations. So we have still seen quite an increase in international payments, which hopefully we'll talk about a little bit more later. But I think one of the really great things that I think the changes to reimbursement has been able to do is almost change some of the societal landscape around culture and the shame of scams, which I think is a really good thing. I think a lot of people working in the industry know that there's so much shame and embarrassment, and a lot of scams go unreported because of this. I think a few years ago, it would have been really unusual to see people going on national TV, daytime TV, talking about a romance scam or an investment scam that they've become the victim of. And I think that's a really, really good thing, because I think the more intelligence that we have as an industry, the more that we can do to disrupt some of these criminal networks. There's still a long way to go on some of this still. But I think the fact that the industry now recognises that this crime warrants refunds is a really, really big step. And I hope that we'll see more of that in the future.
Thank you very much. Yeah, no, so I totally agree about culture and shame of some of these scams, and I think the industry is doing a lot of work against that currently. I'm just pointing towards the poll that we've got. So kind of talking about scams, looks like most people on the call think that keeping up with evolving scam tactics is some of the real challenges that they've got at the moment. I don't know, Kat, as you were just speaking, whether or not you've got any comments on that.
Yeah, international, like I say, but I think as Chris kind of alluded to, before as well, just some of the tactics that criminals use are different. So traditionally in the past, I think we were typically just seeing faster payment to bank accounts, but now open banking, we're still fighting a battle there. Paying off credit cards as well is a new one. We know that those payments as well are in scope for reimbursement. So whilst a lot of organisations have done a lot to tighten up controls around the traditional channels where we've seen scams, fraudsters will typically kind of exploit anything that they can get their hands on. So being able to look at all the different channels that can be abused, even looking back to things like checks, which I know for loads of organisations might not even offer them, but I know for a big bank like ourselves, it's still an area of vulnerability that we always need to keep tabs on.
Tony, can I add to that? Because one of the things that I think is really important to call out as well is we are seeing criminals layer in their scams now. So in the past, it used to just be a payment from a victim to a mule account. What we're seeing now is that criminals are pushing money through genuine accounts to actually sort of hide what they're doing. So we've seen quite a few transactions recently where actually it's been payments going through genuine solicitors and then cashed out. Or what we really hate is the flaming triangle scams where you're seeing a genuine a payment going to a genuine customer who thinks they're releasing a product to somebody and the product gets released to the criminal. So you've got two victims. Only one of them at the moment is covered by APP legislation. So there's quite a lot of sort of more complex flows of funds out there, which are actually quite difficult for banks to try and spot, detect, prevent.
No, definitely. Definitely a big challenge for everyone. And I think that's reflected in some of the things that you guys are talking about, but also what our attendees are sort of mentioning in the poll. Just for time, we've got a few minutes. Pass over to you and now to sort of finalize that question.
Yeah, so no, thank you. And it's the question also looking at initially the industry trends in the landscape since the APP reimbursement regulations came in October 24. So I should say in Pay.UK, our role is kind of a more central coordination and provision of services that connect multiple PSPs or multiple fintechs together. So we're kind of less close to the front end in the way that Chris or Kat would be. We're a bit more like UK Finance or SciFas and providing these sort of centralised consolidated services. But what we did see, so obviously October was the new reimbursement regulations. Now, interesting, we did see a reduction in the number of cases throughout 2024. Value stayed about the same. Cases came down, up to something like 12 or 15%, if I remember right. So that you can't directly say that was because of the PSR's regulations, because there's so many initiatives that individual organisations are doing. But that is what happened. Kind of caused, whether that's cause or effect or cause or correlation is another matter. But anyway, that was good news, wasn't it? So then what we've seen in 2025, there was a kind of a flattening. So that decline stopped through the first half of 2025. And then, the data that we collect and UK Finance publish periodically actually shows cases as well as values going back up quite significantly in Q3 2025, up to a new level. And then that new level is held through Q4 2025. So clearly the message is, I think, and it's one I'm sure that the people have mentioned already, is it feels like the APP regulations were a very positive step at the time. Brought the receive side into the equation and incentivizing them to make changes and to improve their controls. However, as everyone would expect, the fraudsters will continue to evolve and create new situations, and technology and AI are assisting. So, it's a never-ending battle, isn't it, to fight fraud, and we need to all keep looking at what's the next thing, or what are the next big things that will take a big chunk off for fraud in 2026 and 2027.
Yeah, lovely stuff. Yeah, nice little roundup there, and sort of talking about, what you guys are doing and as part of the regulation, what can help there. No, thank you very much. I think we've got a couple of questions coming through, but just to stay on time, we'll probably look to do those at the end. But looking at the sort of account-to-account payments happening instantly, what are primary technical hurdles in performing robust monitoring without increasing friction for the user? So go to you, Chris, on that one.
So I think, Tony, you mentioned the first one there, and the first one is actually time. So I think the issue we've got is obviously payments are getting faster and faster.
Yeah.
The public are expecting them to get faster and faster. I do think there's a bit of a challenge there for us, though, as an industry, because I think that we assume that customers want all of those transactions to be that fast, and obviously we do want most transactions to be that fast. I do think when you speak to most customers, they are happy with an element of friction when they think it might actually stop them from being a victim. And I do think we need to maybe take that on board. One of the things that we've done at Monzo recently is we have started to put a little bit more friction in. Obviously, as a fintech, we tend to not want friction, and our customers tend to join us because it's a seamless journey without much interaction, etc. So that's one of the things we've had to look to do to try and counter the issues we're seeing with obviously fraud. The other one, actually, the one that I think we'll probably end up touching on later, and I think you and I'll end up touching it, is actually the lack of data that we have in the faster payment journey. So obviously, as an industry, we've been talking for quite some time about needing to actually add transactional data into that actual journey. So before the actual payment is released, one of the things that as an industry we've tested a few times now is the idea of adding data points in so that PSPs can share things like age of account holder, how long the account's been opened, average turnover, etc., whether it's a personal account, business account, before the actual payment is released. And I think that will be hugely beneficial. And at the moment, we haven't got that. So we basically go on, well, what's the transaction? Have we seen that account before as a sending firm? Have we seen anything suspicious on that account before? And obviously we've got things like behavior analytics, but even them, that they can be mixed. You can get mixed messages from them. You can end up with false positives. So it's a real mixed bag. I don't think there's one thing that will help us with APP. But at the moment, they're the gaps. They're the things that I'd say are the biggest challenges for us to be able to do some really good seamless detection of APP.
As you say, not one thing. And I think, like you say, with the expectation that these payments have to be immediate and really, really quick. There's a customer expectation there. And obviously, when you want to do your own checks against that, it can be really difficult to manage that customer experience. So yeah, definitely like loads of challenges in that area. Just want to bring Ewan in. Ewan, happy for you to sort of add to that one.
Yeah, maybe I'll touch on the EFD or edX piece just in a wee second. Just on the timeliness, I would echo Chris's point there that it depends a lot on the transaction, doesn't it? If you're paying for paying something where there's a bill or a service which is provided afterwards, or sending money to somebody externally, you're less concerned with the instantness of it. Whereas we look at the growth of kind of open banking and pay by bank type transactions. If you're buying a good and service that you want to consume straight away, or in the fullness of time, buying something in a shop face to face using a pay by bank type of offer, then it needs to be immediate, instant, and reliable. So that point of timeliness depends on the situation, isn't it? So it's making the right decision about friction versus the use case and the type of transaction. But yeah, no, I was going to go on to the immediacy of the data and the sharing of the data. So we've with customers looked at a couple of different options over the years, and with UK Finance, the enhanced fraud data service, people might remember proof of concept a couple of years ago. So we're quite excited. We're kind of getting very close to the do we build it? Do we not? Is there enough support decision point on what we're calling enhanced data exchange? And basically the idea there is that the sending bank or the consumer, the initiating bank, will ask the receiving bank, which of course could be perfectly legitimate or could be a mule account, asking for 3 pieces of information about that account. And they're the ones with the strongest indication of likelihood to be a fraudulent account. And it is like tenure of account, age of the account holder, number of transactions over a period of time type of thing. So that information coming back, going by the previous EFD proof of concept, should make a really big difference to the accuracy of the fraud decision that the sending bank will make, and also reduce false positives, reduce kind of the impact on consumers and businesses. So it was really very exciting. We're hoping to be able to move forward in that development in 2026. And it is just one of these, is there enough support, enough clarity in the proposal? Is there enough funding to go and build it and roll it out in at least some limited form initially? But it sounds very powerful, and I say the results from the previous EFD proof of concept a couple of years ago would suggest that would save around about 15% of fraud value. So that starts to get to a kind of a £75 million a year number. That's a huge benefit for UK PLC as a whole, really, isn't it?
No, definitely. I suppose it really touches on, what Chris was saying about, there not being enough data, and this seems to really plug that gap. So interesting stuff, and I suppose w- something that we should all be sort of looking out for in 2026 to see how that develops.
Tony, can I just counter that slightly though?
Oh,
Only because
Yeah,
it's a panel and we have to have these
yeah,
conversations.
yeah, please do.
The one thing I will say is, and I think you've heard these challenges already from industry. Obviously, it was me that did the proof of concept, and it was years ago. It was like 2022. So when we
Yeah,
did that proof of concept, obviously landscape was in a certain position. And I do think, and actually it's one of the things that I missed when I did my intro on this question, but one of the things that I will say is we've seen a lot of vendors come on the market since then. So when
yeah,
we did the second proof of concept, the benefit had actually declined quite significantly. We still think it's the right thing to do. Don't get me wrong. I'm
yeah,
100% a fan of EDEX, whatever we're calling it now, so EFD, whatever it was for that long, then I'm 100% a fan. I think industry 100% need it. It should be in. It's nothing's a silver bullet, but it will definitely help because it will provide us with context. But I do think that the level of benefit for some of the bigger firms who have actually got lots and lots of vendors in place
yeah,
already and are now really starting to identify their risk and their fraud will probably not be as great as it would have been had we bought in 2022, 2023. And it
mm,
actually brings me
yeah,
back to the point I was going to say is obviously because there are so many vendors, and it was a really good question actually in the Frontier Economics review recently. We had a question around, do we think there's too many vendors? And Stephen, don't hate me. But obviously, because there are quite a few vendors now, we're starting to see quite a fragmented approach when it comes to data.
mm,
So I do think that obviously, so Monzo might be using a vendor, NatWest might be using a different vendor. And if we're not using the same vendor, we don't have access to the same data. So I do think that's becoming a challenge as well. And I think that's definitely a challenge that, and maybe that's also part of APPR. We did see more vendors come on the market once APPR was kind of being discussed and people were really sort of thinking about APP. So I think that's an important point. So Ewan, don't shoot me when I see you next, but I
yeah,
think it was a good point to call out because there has been that lag in time.
yeah,
Still a
mm.
fan, still think we need it, but I do think that the benefit
yeah.
in terms of identifying new fraud is likely to have gone down since the proof of concept.
Yeah, no, it's great. It's a great shout, and that's one of the key questions is confidence level in the business case, which depends on partly what's the cost of building it for us and for all of the banks and building sites that would connect it, but also what's the benefit in terms of reduction of fraud to value, and what's the payback period. So, yeah, you're absolutely right. It's one of the questions we're having trouble just kind of pinpointing in order to be able to move forward into that next phase. But yeah, it's a really important one. So thanks.
Cool. No, thanks, Ewan. Thanks, Chris. I suppose just for the purposes of time, we'll move on, but I bet we could talk about that for the whole hour, I reckon. So we'll move on to liability and mules. So the 50/50 reimbursement liability split places a new burden on receiving banks. How can firms use destination account behavior to spot mule indicators that traditional systems might miss? I'll pass over to you, Stephen, to answer this one.
Thanks, Tony. It's an interesting one looking at destination accounts, and we've been working in the LATAM space for a little while on this sort of problem, and specifically looking at actually having an overarching system that can look at all payments that are going into destination accounts. So in effect, we can feed back that maybe, Chris, if you're sending a transaction from your good selves, we can almost immediately go, actually, this is the total value that's been transferred into this account in the last 48 hours. This is the number of transactions. And what it kind of gives you is currently we're kind of reliant on bank account verification. Is it who we think we're sending it to? But actually having that additional layer of lifetime data where you can actually put values on it, put velocity on it, and give an indication of exactly what is going into that bank account. But I think one of the things we heard very heavily when we were speaking to banks and other stakeholders last year was also about the education piece on it. Quite often, these people have been socially engineered in some way. Appreciate there will be a subset that is complicit as well. But for those who are vulnerable, who have been tricked into this, it's being able to use those real-time transactions in split seconds. And it doesn't have to be a binary yes or no. You may see a subject section that you want to say no to that transaction. But actually, sometimes you may just simply want to pop a note up and just put an extra message on the page to go, are you really sure you want to transfer this because? And then kind of, it doesn't stop the question of reimbursement, of course, but what it does is a little bit of education where you think something's in that grey area and kind of encouraging the person who's making that payment to think again. So you do have the traditional binary view, but that additional source. And Chris, you mentioned absolutely the point on friction, or the keenness of many not to have friction. I've seen many clients actually recently, not necessarily on this type of journey, but putting in the concept of friction. There may be absolutely no friction in the background, but they're putting in a 3-second timer because actually people trust those journeys because it looks like somebody's doing something behind the scenes, and actually putting a little bit of friction in, or making the customer perceive this friction, is actually improving conversion in some things. So it does give us 2 or 3 seconds to do something, and kind of see if we can reduce the fraud at source. And then, of course, if we work collectively to reduce the fraud, the reimbursement slowly becomes less of a problem as well.
Yeah, I think it's definitely that collective approach. We're all in it together, and I suppose if we can share information and work together to stop these things, then yeah, it will work all the better. Move on to Ewan on that question. Do you want to have a go on that one?
Yeah, not too much to add, but just um, on the liability piece and this 50/50 sharing, and just some of the differences we've seen in the market since then. Obviously, what that does is, creates a real incentive for the destination or receiving bank to both have better, improved fraud controls and services themselves, whereas they just didn't have the same incentive, ultimately. And more incentive for them to kind of join industry-wide or network-wide initiatives. So I think things like some kind of data sharing or pooling, or even things like even more simply confirmation of pay, more incentive to join these things because they're more responsibility for the losses. And then the other really interesting side of it is that at least one of the kind of reasonable sized challenger banks, who their approach now is actually about exposing and sharing data. They pretty much say, well, rather than us implementing a whole suite of fraud controls and such like, we'll give you our data, and you go and analyze our data and tell us whether you think these are a mule account or not. Just a really interesting strategy that probably wouldn't have considered a couple of years ago. So that's really the only thing to add, is I think it has created a more both sides of the equation now have an incentive to want to see fraud reduced. So that's probably a good thing in the long run.
No, definitely. No, thanks very much for that, Ewan. Moving on to like compliance. So many clients are working on reducing APP fraud, not just because of the PSR framework, but to protect their own bottom line and revenue. What are the most effective advanced prevention strategies that you've seen lately? I'll go over to you, Kat.
Thank you. I think some of the best things that we see in this space is where you put some of this back into the hands of your consumers. We spoke a little bit about friction at the start, and I think Chris is right. We know that sometimes we can add in friction, and that customers and consumers are happy to see that. And I think when they've got a bit of control over it, I think that makes it more of their banking experience as well. So to steal some of Pay UK and you and Sunder, I think confirmation of pay is a really great example of this. It's not just about making sure that the beneficiary you're paying is right from a scams perspective, but also it helps with miskeyed payments as well. It's the tiniest little bit of friction within an online or a mobile banking journey that flashes up on the screen and says it's a match or no match, but actually just giving consumers a little bit more of that reassurance up front is great. NatWest, I don't really get pulled up at my next performance review for not mentioning them, but we have heaps of pub controls as well. So loads of controls around payments, cards within the mobile app that you can go in, set limits yourself, toggle certain features on and on. And again, giving that to the customer for them to control is really important. My security profile as well is kind of like a bespoke and personalized hub within the app where you can go and look at those controls, but also get more education. And I think particularly if people are watching this and they work in a fraud team, then they know that often we're not the ones actually guiding or leading what we'll deliver to consumers. So how do you bring others in your organization on that journey? If you think about things like SMS, We know still that so many scams start because of a fraudulent text or a fraudulent email. And if you can streamline what the comms from your organization look like and potentially put all of that into the app, you're not only going to be better for your brand, potentially doing it all through an authenticated or a trusted route, but also talking to some of people in your organization who might be more focused on cost. Actually, how much money are you saving from not issuing SMSs or reducing that number? And I think that's the story that you have to tell as well to get people to continue to implement some of these features that can both help from a fraud perspective, but a customer and a cost perspective.
Oh, perfect. Yeah, I think giving your customers some control over what's going on. Yeah, definitely. Yeah, good idea, and I think it obviously works. I see it all. We probably all do in all of our own banking apps. All the things that pop up and assist us. So yeah, no, definitely, definitely a good one there. I'll pass over to you and to add to that if you can.
Yeah. I think the misdirected payments one is an excellent example. So no, thank you for raising that, Kat. And we reckon, obviously, a confirmation of pay from fraud perspective is really only sort of impersonation ones where it helps. But actually, it's got at least the same value or benefit from a misdirected payments area. And then actually now organisations are using it more broadly. In fact, we're trying to broaden the rules. So it's not strictly a fraud point, but if you can indulge me for a second, for example, where people are setting up payroll files or pension files or insurance payouts, where it's all about, making sure that the right money is going to the right customer, and, the cost of misdirected payments and chasing money about the place becomes particularly significant. And there is the opportunity, even we talked about international, to extend COP as an international offering, linking up with VOP in the EU and with some of the other jurisdictions. And one or two of the larger banks have actually done that already themselves for their corporate activities, and they may do the same thing. Obviously, internationally, it has a fraud reduction benefit as well as a misdirected payment benefit. And then only one other to mention, we sort of touched on it a wee bit with EFD, but there's a kind of a bit of a sort of utopia view, which we may never achieve, but it's quite an interesting one, of this idea of whole of market pool data. And of course, the data itself is massively sensitive. It's the personal information of every single transaction from every single account in the UK. So the security concerns around that are obviously kind of off the scale, as you can imagine. But there, a bank A making a decision on a fraud decision on a particular transaction based on just their own data, or based on their suppliers' data in this sort of fragmented market that we've been talking about, just doesn't have the same reliability as being able to make that measure against every single transaction from every single account. So it's one of the ones that, again, we've been talking about it for a wee while. It's very difficult to do, but I mean that would be a bit of a sort of an ultimate utopia, is that would have the biggest impact in terms of reducing fraud and also reducing false positives and reducing the operational overhead and better consumer and business outcomes. So it may never quite see the light of day, but we'll it's always on the roadmap somewhere.
Lovely. I'd love to hear of a utopia, like you say. Probably difficult to get towards, but ultimately is where you should be aiming. So yeah, no, really interesting.
And I should say there are obviously a handful of suppliers who have access to lots of good fair chunks of it, in one or two in particular. But it's the availability of it, a whole of market approach, and also it being available to more than one provider. So it's not, we don't have one monopoly provider of fraud services as the other side of it.
Lovely stuff. All right. Thanks, Ewan. Chris, I don't know if you've got anything to add on to what has been said.
Always got something to add, Tony. This is me. So I've got some things to add, but also at the end of the question, can I go back to the 50-50 just really quickly? Because Ewan was really positive and I want to be really negative on something. So I just need to that bit. So just a counterbalance. But on this question, I think from Monzo's perspective, we've obviously made quite a few changes over the last couple of years, but one of the ones that was most impactful for us actually was pretty much EFD again. So essentially we started doing like Monzo to Monzo sort of checks. So when we was making transactions, we were basically looking at the receiving account and actually saying that's the age of our account holder, should we be sending it, blah, blah. That for us actually made a massive difference. So we saw a massive uptick in our ability to identify fraud within our own books. So I think one thing that we have been doing is been working with some of the other fintechs on the market, doing some offline sort of tests to see if actually the benefit is still there if we actually do it across brands. It's been really positive. And again, I think from our side, that's kind of we're doing that to try and help with the business case, because you mentioned earlier, where is the business case? It's quite an expensive thing to build EFD, or we don't change the name of things. I'm always going to call it EFD, EDEX, whatever it's called now. But yeah, so I think from our side, we're kind of doing that to help with the business case and say that actually, yes, it's an expensive thing. Yes, it's a big build for some firms, but actually the business case is still there. And one of the things that we've done is we've added in some extra data points, which we've shared with the team that are doing EDEX over at Pay.uk, just to say that from our perspective, yes, the landscape has moved on. Those data points were really helpful then, but actually we're now seeing that if you add these additional data points in, it brings that use case back up. So that's one of the things that we've been doing. The other thing for us is that, as I said earlier, we are adding a bit more friction. So we've significantly increased our protect strategy. So we've brought in an awful lot more people that can actually pick up the phone. I know Monzo actually phone people rather than just doing the app. But we've started speaking to people a lot more. And funny enough, it's helping us to break the spell. So one of the things that I will say is I think that was quite a significant shift for a fintech to do that. And it was definitely worthwhile. So we are starting to really sort of see some customers start to actually engage with us a bit more and actually be a bit more honest in some of the conversations when we're saying this is what we're seeing, etc., etc. So they're the big ones for us. And then can I go back to my 50-50?
Yeah, go on.
So Tony, on the 50-50, the one point I wanted to make is that, to Ewan's point, the 50-50 was one of the things we all pushed for. It's 100% one of the things we wanted in APPR, and we've definitely seen it giving some firms that didn't have the business case before the business case to get the funds, etc., to do more sort of the transaction monitoring on the inbound as well as the outbound. So for us, that's not necessarily for us because we already had it, but for other firms, we're seeing that's quite a significant change. We are seeing some firms, though, that aren't engaging on the receiving firm side. So one of the things I should have touched on the first question is that one of the big challenges we've seen since APPR came in is that some firms are finding themselves out of scope. Some crypto firms, for example, are out of scope. So they are potentially not as incentivized as other firms who are kind of in that market. So I think that's one of the things that we'd still like to see change. We'd like to see that the scope of APPR was expanded, and obviously recognise that some crypto firms aren't regulated. So it's very difficult for our regulators to step into that space. But it would be really good to see all firms that can send and receive faster payments that could potentially end up being a scam involved and playing their part. So that was the only bit I wanted to say, like you, and really positive with the 50-50, but there are still some firms that aren't quite in the same space.
Yeah. And actually, just to chip in as well, just also the PSR kind of review of the APP policy, and these are all the kind of things that we should all be chipping in. Because you're right, there are a few anomalies or improvements, and one just because it came up last week actually. So crown dependencies. So you can have an FPS, you can have a UK sort code and do FPS transactions, but if you're a crown dependency, they're not included in the scope of APPR. And obviously, some consumers and businesses are having a loss, and they're either not being reimbursed, or then the organisation themselves are saying, oh, hold on, why am I not able to get this back? So there are just these wee anomalies to try and...
it's not even just crown dependencies, is it? There are other PSPs that are outside of the UK entirely, like Proper International, that use a UK sort code and account number because it lands somewhere else and it gets shifted. It's like a book transfer. So I do think that they also are a gap. But I think we've probably all called out those things in our response.
Yeah. Sounds like some policy and advocacy asks there for probably UK Finance to have a look into. So thank you. Just want to see whether or not, Stephen, you have anything else to add on the compliance question.
I'm just going to jump, if I may, on the back of actually, Chris, your comment there about those who aren't in scope. And I think this is the joy of being able to look specifically at the destination account. So even if they're not doing anything, with a pool of data to know that we are all sending money through to the same destination account, whether that may be literally the same account, or potentially the fraudster's taken up 5 or 6 different accounts at the same firm and looking at sort code level. I think there's an option within that, and then actually having that umbrella view across the UK market to say that the money may be siphoning little by little to whether it is crypto or offshore, gives us the option that whilst we can't control what they're necessarily doing, except through advocacy, we may be able to collectively work together to stop the money going in that direction.
Definitely. Okay. Sorry, I'm just making some notes. No, fair point, Stephen. Thanks very much for adding on to that one. I think no webinar probably at the moment isn't complete without a question on AI. I'll pass to Stephen first of all, but how can generative AI and global data consortiums help disrupt the money mule networks that facilitate real-time fraud?
If I take the second part of that question first, if I may, in
Yeah.
terms of global data, so we've been working with our LATAM customers for some time and working across a number of regions for this with a single solution that allows us to see where the money's going. And I referenced, I think, in the last question, what do we do as the UK? But I'm sure our LATAM customers are seeing the money going in the same direction, as will be our Australian and Canadian friends are seeing all the cash going off to whichever joint accounts they are, because we know the fraudsters are global. So having a global solution to say, actually, we can look at all the destination accounts in one pot, where is all this money going, actually strengthens us outside borders at the same time. And then once you have that, you can then layer on the AI element to it and make decisions in real time. And we touched on friction earlier, but we make many of our onboarding decisions in near lifetime. By that, I mean milliseconds. And actually adapting the same technology, be that device, be that AI, be that machine learning, be that traditional velocity and volume rules, can have a similar effect at this point in time. But you also see, and I'm sure we all know the whack-a-mole analogy that everybody uses. I heard another great one the other day. It wasn't one of mine, so I can't take the credit for it, but it's more like squeezing a balloon. And whenever we squeeze a balloon on APP, it's going to pop out in credit card or insurance or e-commerce. So actually having a single solution, and again, Chris, to your point about having a single source of truth, absolutely agreed. The fraudsters are hitting everywhere. So if we can go, this device just did e-commerce fraud at account creation and has just hit a bank for a new account and has just hit APP and has just hit insurance, that strength of data, those fraudsters are diversifying. I was asked by somebody the other day, is fraud being used to finance other criminal crimes? I went, no. The fraudster is just like us. We're all businesses. We're diversifying to see where we can find revenue, where we can find new customers. The fraudsters are doing the same. They're just diversifying into new fraud lines, into new product lines. The only difference is they don't have annual returns and tax. But ultimately, fraud is just one credit line for them. So if we can link up the fraud across industry, APP, and everywhere else, it kind of strengthens all of our front doors and stops them squeezing one end of the balloon and then popping out somewhere else that we may not expect them next week.
No, definitely. Yeah, fraudsters are not agnostic, and I think they'll just a lot of them will just go towards the weakest controls and try and make money that way. So definitely a good point there. I'll bring Kat in on the question about AI and whether or not you have any thoughts on that.
Yeah, there's a lot of beauty to it in that I think it can be used for so many different things. So onboarding, as an example, can you use AI detection tools to pick up things like synthetic IDs, stop the mules getting in the door right from the get-go? Then into your in-life, do you have the capability to look at agentic AI, which might be able to pick up some of those signs like throughout the payment journey? I think as well, one of the poll results before came back and it said that people maybe were sometimes struggling to keep up with the latest scam trends. That's a brilliant use case for AI. If you have the data there and you need someone or something to be able to crunch that data quickly, that's a really, really good way to do it and to pick up on some of the commonalities between the bad payments that you're seeing. And then for more of those complex cases that Chris again mentioned before, you probably want to find that you need a blend of both AI tooling but also human intervention on a lot of these cases. So I think where we're at with AI now is removing some of those less rewarding admin tasks, things that take up time within an operational unit that you should really be looking to strip out now, because that capability is there. So being able to transcript calls so that an agent doesn't have to then go and write up notes or something like that, all of that is then time back. I don't think that we should ever really get to a space where we are eradicating humans from fraud prevention, because it's such an emotional subject, and we need emotional intelligence there as well. But the more that you can free up time from your agents of doing admin tasks, then the more time that they can give to looking into some of those more complex cases as well, which will hopefully lead to some of those better investigations, particularly in your mule networks.
Definitely. I think that's a really good point, actually, how just the general time saving on just administration and analyzing information that might take a bit longer. It frees up time to do the real work and the good people stuff that, Chris talked about earlier, the actual speaking to people on the phone and preventing stuff from happening, and helping them through that. So yeah, no, I think that's a great point. We're on our last question now, and we've kind of touched on international trends throughout the call. I'll pass to Stephen to sort of close this one off. So, as APP fraud is a global crisis, what can the UK learn from international markets where Equifax are already addressing these issues?
I think because we've got learnings in international markets, I always think when we're talking internationally, there's bi-directional learning. Often we will see things that haven't landed in other jurisdictions yet, but will, and vice versa. So actually, I think having an international lens on sharing best practice, sharing counter fraud trends is really important. Over the last 20 years, client side, I've gone into some countries and seen frauds that haven't hit the UK yet. And I've been able to put controls in ahead of that, and vice versa, being able to give them a heads up of something that might go that way. And certainly from an APP perspective, we know those frauds are international, but it is sharing trends and best practice, as well as using the same tool and the same data. Because I think I saw one of the questions in our chat was, what's the next scam going to be? And is that going to hit one of us on this screen? Is it going to hit somebody on this webinar? Is it going to hit somebody internationally? And I think the more we share internationally, I think the better we are all off for this. I think that's the joy of the international sharing piece. And it isn't just all the money's going to the same account in one place. It's sharing best practice and sharing trends and sharing stories that I think inspire us to make the next tweak to our counter fraud journey. I was reading the PSR paper the other day and appreciate that the stats were from pre-reimbursement. But so many people were doing so many great things already. We've not been in a bad place with this. It's just always iterating to spot the next fraud, to try and be one step ahead if we can of the scamsters, or at least not half a step behind. And I think that's probably what gives us enjoyment in all of our day jobs.
Yeah, definitely. And I think learning from international partners is really important. And I think in an age where we are also connected, it's getting easier and easier, and spotting what someone's doing somewhere else, and as you say, put in the controls preemptively so that you can stop that from happening. I think that's a great point. We're at the end of the questions, but we've got some questions from a few of the attendees. Stephen, you've been asked specifically, what methods, tools are you able to utilize to identify those behind the APP fraud?
In terms of identifying those behind, I think digital device is always useful, because we talk about data connection in terms of fraud prevention, but actually you also get data connection in terms of identifying who the legitimate person is. So quite often, this person, whoever the fraudster may be committing fraud against all of us, but they're going to have a genuine telephone number somewhere. They're going to have a genuine bank account where their real money goes into. They're going to be genuinely insuring a vehicle somewhere. So actually, I think when you look at it, you can often link that data up. And I think sometimes we spend a lot of time talking about linking fraud data up to protect each other. But also I think there is that opportunity to also link data in to actually go, who committed this? It doesn't necessarily mean every account that person's taken out is fraudulent, because they will need real services. They'll need electric, gas and water and a mobile. So seeing what we can do with that data, I think as an industry, but more widely is really important.
Yeah, I think enhancing what we have with other types of data is definitely something that, as an intelligence manager myself, like would love to do. There's open source stuff out there, but real the real good stuff is the stuff that's in other industries or in other places that you can't quite get to. And yeah, maybe one day we'll get to that utopia that Ewan's speaking about, that where everything is just in one place and you can hook it up and interrogate it as you please.
I
Okay.
think, Tony, you and I have been investigating things for years, and quite often it is, and think, to points made earlier, it's a manual process.
Yeah.
Whose biggest tool is Excel, quite
Mm,
often. So actually, that is where AI comes in. It's not
mm,
necessarily doing something in real time to stop things, but actually it's investigating after the fact. Who can
mm,
set up a ChatGPT or a Copilot or a Gemini to go, let's scan all of my data, let's just let it run in the background and actually come out with an evidence pack to go, we found something, it's really useful, we can put this in front of whichever police force it might be, or it found
mm,
nothing. So you can actually do that with the right automation. You can do that in a very resource-like way.
mm.
And you and I know, and others will have spent a huge amount of time chasing leads down and finding that you couldn't nail it down to something. And maybe that's
Yeah.
where AI will make the difference.
Yeah, definitely. I think those time-saving aspects will be really useful, but just able to spot a pattern will be really, really important as well. Thanks, Stephen. Just going on to another question. I think I'll point this one at you, Kat. So this one was, are you seeing challenges where legitimate firms contact customers and it appears similar to a scam? To give more context, they said, I saw that a regulated debt collection firm was contacting customers in a way that felt really scammy, and I imagine many customers will have ignored the contact, which could cause harm in other ways.
Yes, in short. In a previous role in the bank, so I used to have a lot to do with education. This was always such a bugbear for me, as being consistent with education, not just as a bank, but across the industry. Take Five is something I know that they'll struggle with as well, but they're going out with one consistent message. I think that any organisation should be prepared to give the age-old advice of, if you're not sure about this, you're okay to hang up the phone and then call us back on a trusted number. Here's where you can find our details independently. Being able to query emails as well and look for trusted information. So I would say to any organisation, really, you need to have a really good long look at your comms strategy. The bigger the organisation there is, the messier it gets, because you've got lots of different teams and now lots of different communications to customers and consumers about various different things. But I would say, if you get something like this and you're unsure, then do your own research on it and find the trusted way to call them. If it is your bank, 159 is another really brilliant industry
Mm,
tool to be able to safely and securely get in contact with your bank. So it is a challenge. And the other thing is, things like brand tone for every organisation are going to start to interfere about how people want to deliver these messages. So it is a big challenge for sure.
no,
I think if
definitely.
I could add to that, Tony,
Go on,
I've
Stephen.
seen examples on SMSs sent where it went, "Welcome to our service. This is the telephone number you need to ring," and the telephone number has connected through to the right company. So there's
Mm,
also ones that people may not know that either their information is being recorded because it's going through, they're getting the service they want, or it's simply going through a high premium telephone number. So
mm,
sometimes I think there's scams that happen that people don't even know have happened, maybe until they spot a very large phone bill. But some other things, and the fraudsters are super clever. How do we share that in real time and try and spot those?
definitely. definitely. No, thanks, Stephen, and thanks, Kat, for answering that one. Hopefully, we'll get one or two more questions in before the end. So, Ewan, one specifically about Pay UK. So, is it a responsibility of Pay UK to facilitate the sharing of data between sending and receiving banks? For example, the age of account, company and corporation date, and what is done by Pay UK in this regard?
Good question. And maybe describe we have different obligations, but that's the right word, on different services. So we're the payment system operator for banks, faster payments, and ICS. So that's obviously supporting direct debit, direct credit, single immediate payments, checks, all sorts of things. So there we have an obligation to kind of manage the systemic risk, provide the services, improve the services, make sure they maintain trust and confidence. In other areas we don't, but sometimes we're mandated to do something. So the PSR often mandated us to do the compliance and reporting part of the APPR regime, for example. And then other times, actually, the PSPs, the banks, are mandated to do something, and it just kind of makes sense for us to provide a service for them. So confirmation of pays, like that. We're not mandated, but the customers who connect it are mandated to ours or somebody else's. And the current account switch service is similar. Banks are mandated to provide a switching service, and we just happen to provide it. But actually, a lot of other areas, and these fraud data ones are in this category, we're not actually obliged to, and it's not actually formally part of our remit. But if the industry wants something to happen that a not-for-profit convening organisation like us could help with, and would be the sensible organisation to do that, then we're delighted to. But it kind of needs enough banks and building societies or fintechs to ask us to do it. So that's maybe a slightly long-winded answer. So we have no particular responsibility to do EFD or EDX, but we'd be delighted to do it if the right people want us to do it, kind of thing.
I suppose that.
Sorry, just I wanted to add to that, just because it brings me back to the thing I was saying earlier about there being vendors that are bringing out new services. So obviously we do know there are some vendors on the market that are bringing out a version or something similar to EDEX.
Yeah.
But again, it comes down to Ewan's point. We really need to have the max market coverage for something like EDEX to be really beneficial. You need to have both the sending and the receiving firm in the mix, or at least for both firms to have allowed for their data to be used, which obviously is quite a difficult thing unless you're a really well-known vendor that you've got a really strong relationship where you might allow your data to be used in that way. So I do think, personally, as I say, we've always been a supporter of Pay.UK doing it because they've got that coverage. But because there has been that gap in the timeline between the original proof of concept and obviously potentially delivery, we do know that some vendors have stepped in to fill that gap. So it's just worth being aware of that one as well, just to get the balance.
Yeah.
I suppose all the requests are at the behest of, the majority PSPs and funding and all sorts of stuff that sort of comes into that. And as Chris says, there will be stuff that is also picked up by others. I think we've probably got enough time for one question, Chris. So, in cases where an intermediary acts as a technical gateway and only holds funds for a brief settlement window, what are the regulator's expectations for stopping the clock or freezing funds? If the money has already been settled to the merchant's ultimate bank account, is the intermediary still the entity responsible for the 50% contribution, or does that liability shift to the merchant's final payout bank?
So having been so vocal during this webinar, I'm going to have to literally now say it's really complicated. So essentially with that one, we ran so many workshops on this before APPR went live, literally, and there's a massive chapter in the industry guide, the best practice guide that's published by Pay.UK, that actually says around the various responsibilities of PSPs and the various different models. That one that question is about is actually one of the most complicated ones. And I think it's one of the ones that led to me saying at the start around certain PSPs are able to define themselves as out of scope because of the fact that the guidance and the definitions under APPR for relevant account and service user, they are the things you have to look at and essentially say, do my accounts meet those definitions? And did we hold those funds for a period of time? All of those things need to be added together before you can actually determine whether you are in scope for APPR. Without looking at somebody's business model, I wouldn't be able to answer it on this call. But all I can say is it is really complicated. And the one that they called out where they say that they actually just hold it and forward it on, most of the time that's out of scope because they're basically just doing it as they forward through, but not all the time. So it's a really complicated one. And say it's a massive chapter. So if people are uncertain, go and look at best practice guide, which I got.
Lovely stuff. I wonder if that's one of those ones that Kat sort of will put into AI and just say, can you work that
Yeah.
one out for me? Definitely stuff that I've been doing recently.
I can promise I have had a good look at the best practice guide a few times.
Yeah, lovely stuff. Okay, well that probably draws us to an end here. I don't know if anyone has any closing remarks or comments that they didn't quite say but wanted to.
I think just one from me, if I might, Tony. Thank you to all of our guests for joining. We do have a demo of a tool that we're bringing into the space in the UK in a couple of weeks. There'll be an invite that goes out after this. We'd be delighted to kind of show people what we've got and get feedback on that as a system and see how we can help in this space.
Lovely stuff. Thanks, Stephen, and thanks all for you joining us today. Thanks to Chris, Kat, and Ewan as well for helping with the panel. I hope that you can join us for our next webinar hosted by my colleague Ian Bula, based on climate-related financial risks, an introduction for non-systemic banks tomorrow at 10 a.m. Coming up, we've also got an event on women in economic crime, networking drinks reception on Monday, and we've also got a sanctions conference on the 2nd of June. Our key conversation in fraud is also Monday, the 15th of June. So all sorts of events that UK Finance are hosting that you're all more than welcome to sign up for. Please do let us know how you found the webinar by filling in our feedback form, which will pop up once the webinar has closed. I wish you all good day. Thank you and goodbye. Take care all.
Thanks, Tony. Thanks, everyone.
So much.